Hello, it's Robert Miner with Dynamic Traders Group with this week's trade strategy update for our YouTube subscribers. You might want to review or listen to the last week's trade strategy for the euro. The euro topped on Tuesday, which was about a day later than anticipated. I anticipated it to top about Monday, and it topped a little bit higher, up at a higher level than anticipated. But indeed, it completed that wave 5 advance and then made a bearish reversal in the daily momentum, and of course has been sideways to down since then with a pretty strong down day on Friday. And on Thursday, I did a detailed trade strategies series last week for subscribers, but on Thursday, the ideal setup came for the short trade with very minimal capital exposure. And for a probable 3 to 5 day decline to around the 50% retracement, which is also the wave 4 low, and that's a typical target for a correction to a 5-wave advance. So going forward over this next week, what you might consider is that more than likely this is what's called a wave 2 corrective decline, which should reach around, let's just say the wave 4 low, about one spot, 153, and as far down as the 61.8% retracement. The daily momentums are still bearish, so more than likely there's another 2 to 3 days sideways to down, but the real trade will come up in a few days following the next daily momentum bull reversal, which should coincide with the end of a wave 2 correction. And if that's the case, we should have an even stronger wave or section or bull trend, whatever you want to call it, up to a new high. So that's what we're looking for closely in the next few days. But again, you can review last week's and see why we anticipated we were at or near a daily high that would complete a wave 1 and be followed by a 3 to 5 day corrective decline for a wave 2. Well, let's just take a look at a couple markets for this coming week that you might want to be prepared for. Well, one of the markets that I think is going to be the most interesting and have one of the best setups this coming week is gold. And really what I'm going to talk about now applies to silver as well as XAU, GDX, and mining stocks as well. The GDX sector, which is an ETF of mining stocks, and silver and gold, they're all in about the same position. So this is a weekly chart of gold. And here's what's really important is 2 weeks ago, gold made a bull reversal, and we call this a dual look back momentum bull reversal, positive bull reversal. Well, all bull reversals are positive, of course, which I believe completed a 5-wave decline and should be followed by at least a corrective rally lasting several weeks and reaching around the 50% retracement, if not higher. And that's a fair amount above the market. And we're just in the initial stages of that weekly trend. So it's a great setup, and this coming week is probably going to complete that setup. So what you want to look for is that more than likely last Tuesday we completed 5-wave advance for a wave 1 high, and we're making a wave 2 correction. Sounds a lot like the euro dollar, doesn't it? And the daily momentums are still bearish. They're not oversold, so that alone would indicate we probably got another 2 to 3 days sideways to down before we complete this correction. But why we want to be really alert to this and an opportunity to go long this coming week is because we're probably just in the initial stages of the higher time frame weekly bull trend, which probably has several weeks to go. So here we're back in the daily chart. And again, if we make a bull reversal in the daily momentum, that'll put it in sync with the weekly bullish momentum to continue the bull trend. And the ideal setup would be in the next 2 or 3 days if gold declined to around 50% retracement or so, which again, the 50 to 62% retracement zone overlaps the wave 4, and that would be the ideal low for a correction, ideal price zone. And because the daily momentums are bearish and they're approaching the oversold zone, that's a warning we should be within about 3 days of completing that corrective low. Here's the 240-minute data. Let's get fewer bars in the chart so we can take a closer look at it. And again, it's a potential 1, 2, 3, 4, 5 that completed a wave 1. That indicates, if that's a legitimate 5-wave advance, it indicates that the higher time frame trend is bullish. And what helps to confirm that is over the last 3 or 4 days, the decline off of the August 28th, that's last Tuesday's low, this is a corrective type pattern. It's not necessarily complete yet, but any time it took out a prior minor swing high, in this case it would be Friday's high, would indicate that that correction is complete. Now, the time and the price relationships as well as the daily momentum indicates another day or two at least sideways to down before it's complete. But boy, this is something I really hope you keep alert to in the next 2 or 3 days. Possible great setup on the long side, and I call this my letter to Santa Claus would be to see gold sideways to down for the next 2 to 3 days, reach around a 50% retracement. Let's just call it 1194 or lower, and then make the daily momentum bull reversal. And that'll be the setup with very low capital exposure for the potential. Go back to the weekly of a multi-week advance up to around 1277 or so. Now, I'm not forecasting it's going to reach that. What I am doing is I'm identifying a condition with a low capital exposure and high probability outcome. And that condition is because, number one, in the middle of August, we reached the ideal end of wave 5 target zone, which was just above the December 2016 low, which we, on the December continuous contract at least, we didn't exceed. We made a dual look back momentum bull reversal. So that alone, followed by a daily momentum bull reversal, is a dual time frame momentum setup to go long. And I think there's a possibility there's a substantial amount in the upside. But that's all speculation. All we're doing is identifying once this condition is met, we're in an ideal position to enter a trade with very minimal and acceptable capital exposure with the potential for fairly significant gains. So that's gold. Silver's in basically the same position, as is the GDX. We follow that in our reports, the mining stock ETF. So take a look at this in the coming days, and let me show you one more you might want to be aware of. This is Notes weekly chart. And the way I'm looking at Notes is from the September 2017 high, we made a 5-wave decline, an almost perfect Elliott wave decline into that low. And there's a lot of time and price right at that low for the end of wave 5 of 5. And then we're looking at this, or I should say I'm looking at this at least, as if the first advance was an A. We made a little A, B, C flat. And now we're doing a wave C, which should have a couple, 3 weeks more to go. And just this past week is the Notes weekly momentum reached overbought. Frequently, they're overbought for 2 to 3 bars on whatever time frame you're looking at before the actual weekly reversal is made. So we're at least it's warning us that there's probably not a lot of on the upside time-wise, but we have some time factors kind of mid to late September to be aware of if notes and bonds continue sideways to up into that period. And bonds actually themselves didn't reach the overbought in the weekly momentum. But a key is the week ending September 21st. That's the low to high time factor. And should notes continue to be sideways up into September 21st, that would typically be the maximum for the uptrend off of the early August low. So if notes are sideways to up into that time, just be aware that we're stretching to the limits of time as far as completing what I would then label the wave C coming up, and that would be a major end of a major correction followed by an eventual bear trend that would last many, many months. The other thing that happens around that time, it'd be the next week, is the Fed announcement is on the 26th. That'd be the next Wednesday. So we always look if a market's trending into the Fed announcement for a possible reversal. And also, September 21st is the fall equinox. Now, don't ask me why, but equinoxes and solstices you always want to be aware of, and the fall equinox in the financial markets is a very frequent date, plus or minus a day or two, of reversals in the financial markets. The other time factors we have at mid to late September is we'd be right in the zone of the 38 to 62% time retracement of this 5-wave decline. And of course, we've already reached the 38.2%, and that's usually the minimum time retracement for a correction against a 5-wave trend. The maximum is usually 62%, which is, mid to latter part of October. But boy, right in the middle of this is where these September dates fall. That'd be about the 50% time retracement. Should notes continue sideways to up as anticipated, at least for another couple of weeks, if not 3 weeks or so. Once we get into mid-September, if notes continue to be sideways to up, that's when we want to be on alert that this higher time frame correction and bull trend is about over. Let's take a look at the daily data, and anything I say about notes is relevant to bonds as well. And this is what we're looking at for the last week, is to complete a wave 2 correction, and it looks like it probably is complete. This 5-wave advance into August 22nd just reached within a tick of the extreme end of wave 5 price target zone. So that was a real key price level to be at to complete the wave 5 of the higher time frame wave 1. And more than likely, we just completed last Wednesday a little ABC wave 2 correction. And we're anticipating that for the past few days. Number one, because the weekly momentums were bullish and we haven't met the minimum time probable for the bull trend. And then number two, on Thursday, we made a dual look-back momentum bull reversal. From right above the 50% retracement. So more than likely, bonds and notes have completed a corrective wave 2 low, which will be followed by another 2 to 3 weeks anyway, sideways to up. So this is just the early stages of, or probably just the early stages of the continuation of this bull trend. So you might consider bonds and notes trades, and the setup is already, the confirmation has already been made. So the stop out point, of course, is the last Wednesday's August 29th low at 119.31. And if bonds or notes decline below last Wednesday's low, it would void this dual look back daily momentum bull reversal and tell us that something else is going on, and I'm probably not correct that this was a wave 1 and we just completed a wave 2. So we're just coming off of that low, and the other thing that we did on Thursday is we already made the initial reversal confirmation signal when it traded above the prior swing high that was made just prior to this Wednesday's low being made. So what I've advised our subscribers in our trade strategy videos as well as our regular reports is on any intraday correction in notes or in bonds, like maybe, I'm just speculating, like let's say maybe we got a little 50% correction of the advance so far, and then we had a 240-minute momentum bull reversal. That would be an ideal setup to enter with very low capital exposure or very low risk for a probability of continuing the bull trend to well above the August 22nd high. So that's a great setup this week. And just to be aware of that. So we've got a few markets to really be aware of this week, and that's a probable corrective low in gold and the euro. We've already probably completed a corrective low in bonds, so any sort of minor setbacks are ideal setups to go long. There is a potential short entry strategy in the stock indexes. It's just not as clear a setup quite yet. We've got a key support and reversal point that has to be taken out to indicate the higher time frame top has been made. So we're not going to talk about that today, but take a look at these three markets. I hope you do well this week and you have fantastic weekend, remembering that Monday is Labor Day and U.S. markets are closed. But it looks like we've got a really great week coming up with some fantastic setups, and I hope you take advantage of them too. So also, as I hope you tell people about our YouTube channels and pass the word out. Hopefully, get more people subscribe. And needless to say, it's like any other, of the YouTube channels. The more people we got, the more incentive we got to keep putting up regular video updates like we're doing just for the YouTube subscribers. And also, if you like what I'm talking about here and on these trade strategies and tutorials that I do on YouTube, check out our regular reports on www.dynamictraders.com. This is Robert Miner signing out for today. Take care.